Hi and welcome to the training video where we're going to go over the preceding week and we're going to look at where people had difficulties and where people didn't have difficulties and where they done very well indeed. First thing to bring your attention to is we have an update to the BAT software. It's just a minor update. It was something to do with the historic wow lines. That's now been repaired. Most of you wouldn't even notice. It was just sometimes it used to come on and sometimes it used to go off, sort of at random. Yeah, anyway, that's been fixed now. So if you go up to your indicators, you can see that we have V24006. You can put that on there. And the only other one I have on here you can see is trading sessions, which is Sonar Lab, which gives me these boxes here. You can see London and New York, and that gives me the sessions as well. So if I want to just see what's active or where it might be active at the moment when I'm making a video, for example. Now, first off, we're going over here to have a look. We've got Monday over here. Let me just get me out of the way down there. We don't need to be looking at me. Now, as you know, what we do is we mark up where we're likely to see stop takes. This is a very important aspect. If we get the stop take and we identify that, then we are going to do very well indeed. It's when we don't identify that, it becomes a more speculative trade. So what we want to do is, first of all, find out where the stops are likely going to be are placed and where obviously they're going to be targeted. Now, historically, it's sort of going back history. It's sort of very easy, and it's very easy to cheat because we can see what happened. Now, I did make a complete video on how to decipher where you're going to put these lines in, which you might want to go back and check on that first. But I'm going to recap sort of thing on this video for you going forward, so you're ready set up for next week. Now, thanks to a student, I now use this line here, which this one with a little circle at the end, which means it'll just anchor to the point we want to do. Now, if we click on here and we set that up, we can say, oh, well, look at that. That was lovely. That was great because this actually happened and this went down. But if you'd watched the other video that I've done about defining these, you will see on that video where I say that what I actually want to see before I define where a stop loss is going to be, or a stop, I'm going to mark this up. I want to see something defined like this. This to me is not defined. Yes, we get this move up, but then we get this. So it's rather cheating to put this line on here, and certainly I wouldn't do that. So what I'm going to do is I'm now going to just move that across. I'm just going to get rid of the marker first. If we can move this, I'm going to move this across. Now, why am I happy with it here and I wasn't happy with it over here, even though it's pretty much the same area? Again, the reason why is because now I have a defined area. I know that any traders that sold the market, and we can see it has been sold by this drop through here, any traders that were selling the market down here believed it was going to go short, were going to be putting their stops up around this level here. So I'd be looking at this level all the way going forward. I just have this set up, waiting to see anything, if anything came up here, because I know that if it does, we're going to get a reaction away from that. And right through Monday then what happens is, just one other thing I want to say, as the market comes back down here and then goes here, you can see that here we have a good defined area. So I want to put a stop marker on here. So I'm going to just drop that on there. Very annoying, you have to turn those off first. So I'm going to put that on to there. Okay, and so I've just put this on when the market's around about this level here. I can see it's sort of running out there, and that gives me that V, if you like, to put that onto there. So I'm now quite happy with how I have this set up. Now, going forward from here, what I'm looking for now is what? Okay, well, I can see the market come down through here. I'm expecting a push back up at least to around halfway through this long down bar here. Why? I made a video about that. That's sort of filling the voids, if you like. That's what I call it. It's filling a void. It leaves a void in the market when you get a move like that. Think of it like, I'm going to try and draw it on here for you to give you an example. Make this nice and thin so you can see. So, for example, if we take a bar, let's take this move down here, for example, as opposed to this move here. So when I say about filling the voids, as this market's going down here, you can see, we're getting a lot of up and down prices. We get a lot of prices, so it's quite condensed, the prices. So a lot of prices contained within that range, if you like. Now, when you get a move like this can occur with some much greater spread of prices, if you like. In other words, it's more like almost like jumping. It's like a high volume trade that comes in and it pushes the price off down, and it sort of leaves voids within that bar, as it were. And what you'll find is the market will often go back and it will probe into these these voids, and basically I call it filling the voids. It's going back and the trades actually fill the voids, as it were. And I know that's not a technical term, but if you look at charts and see how that works out, you'll see what I mean. I'm drawn to this one over here. You can see this one here, and then the market comes back up. You can see comes back up and starts to fill the voids on there. So quite an important thing for you to have, and actually see another one there as well. And Dave made an excellent video on this, really is very good, how he trades these, and you'll see that in the training area, so I advise you to go and check out that one as well. Okay, so then going forward, we had this is Monday right the way through here. Okay, you can see we've got Monday here, and then we go Tuesday, Wednesday, Thursday. So Monday, you can see the market then comes back off of here, and then it starts to get into this flatting period. And what happens is you'll see how it hangs around on the midline of the floating zone. It's not getting out to the extremities, and we know that once we get a market that's hanging around, sticking around the center line, there's no energy in the market. It's not going anywhere. It's just racking around, and that is not a market that we want to be involved in. So what we're looking for is the market to break out of that and to give us some impetus on where it might be moving to. Now at this stage we have a downward trend starting to build up. And by the way, I'm just looking at this at 30-minute. Notice I'm just doing this on a 30-minute at the moment. And then we have this market, this setup here, and then we see the market come down through here. And I think, okay, well, this could possibly be a stop run going through here, because we have had all this move up here. So this could be a continuation of it. So this could just been a retrace. Stops were set up here. And you can see what Pat does. Pat actually detects this and actually puts in the pressure point here, telling us, hey, there's a pressure being applied to this market which is likely to cause resistance to lower prices. And then we can see exactly what happens. So the market starts to push up through here. Now what would have been interesting here is, of course, if the market had actually started to move above here and then get up to this level here. So this could well have triggered a buy, and I know that some of you did actually buy onto this. I'd be quite cautious of this. I'd be maybe happy to drop down and look at a lower time frame to see if I could get a tight stop on that. But I'd be quite cautious because the market is just sort of hanging around here. This is just a push through here, and we're in a downward trend. So it's a little bit conflicting in what I'm looking at. Okay, so moving on. Indeed, the market then comes back up, and again, it just sort of hangs around here. And it's not sort of breaking out of this level down through here. And so I'm going to see if, okay, I can get another area where there might be a stop take put in here. Now, this is not very good here because it's not outside, but this one comes up to here and comes off. So we end up with this here. So I'd be quite happy to put one on there. And then we're on to Tuesday now, remember, onto there. Okay, so I'm putting this in here. And we're still in this downward sort of trend a little bit, and we're still getting the market still hanging around here. But I've got this up here, so I'm quite happy with this. This is going to be okay. That'll sit up there. The market comes back off, breaks outside, gives us a diamond, which is give us a good indication the market is definitely going to run into some resistance to lower prices. And we've got this area up here, which was our previous blue line that we had marked up. And now you can see that we've got this down through here, and then we've got this up through here. So this could trigger a buy just above here, which again would have been worked out very nicely indeed, but we are going against the trend down here, so we're going to be resistant about holding on to that and taking off, trying to get a lot of pips out of it. And you can see exactly what happens. The market does break through here. We go green, 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 green. See the yellow bar there? Market makers enter, the whales enter there and kill off that move at that point there. And again, we're back into the same old thing here. We're getting stuck in this midline, again giving us caution that we don't really want to be trading in there. It's just not looking very good at all. And then later on, we can see on Monday, so it goes right the way flat through there, and then on Monday the market goes, let's see, it sets off straight away at the beginning of the Asian session, then comes back down through here, expecting a bit of a move back up to fill on here. We'll have a look at that in a 15-minute chart in a minute and see what that looks like. And so here I want to put a line on, which I had got marked up, as you can see. And now things start to get interesting, don't they? Because now we can see that we know that any traders have put stops up into here. And now we can see the market then comes off down through here, gives us this, where our stop's going to be taken. The market then starts to push up from the pressure point, starts to go up through here. Not really keen on this at the moment. It's up, it's still hanging around the midline, and now it breaks out through the top and punches out the stops through here. Why do we know it's punching out the stops? Just look what happens immediately after that. So now we've got the story. Now we can see. So we've had this very tough sort of couple of days going through here, but now we're getting into market movement. It's the beginning of the New York session. Stops have been run, and then the market gets into a nice downfall and gets right back in. You can see the actual trend traced here, and then carried on down. And then pretty much it carried on, and it was pretty good as the week played out. Now I'm just going to go to a 15-minute chart and have a look on here. And let's just, rather than go over to onto my tab there, I'll just go on change this to a 15-minute. Oh, got to get rid of that. I'm mindful this video is going on a bit long now, I can see. And if you can see by going to the 15-minute, the lines are carried across so we can see how everything works out. And you can see here again, that's the point we looked at over here. And you can see Pat puts a marker right on the top there for us. Let's get a marker on here for you. So I suggest that you enter on your 15 minutes. That's why I talk about this. And you can see here, right on the top of this here, right on the top of here, after the stop takes. And this is the important thing. These are the trades that are they jump out and bite you because you've set this up. You've sent the market to mess around on here, and you're expecting that, all this through here, you're expecting this to be targeted. And when it comes up, you can see it's driven up on the green. Pat puts in the indicator, and then it starts to move down. And the reason it starts to move down because it's punched the stops out from here. Exactly the same process over here. See, Pat puts a marker in here. Why? Detected, and that's where our stops were. And then the market gets in down from there. And this is why it's very important to keep it simple. Use your stop taking as a prerequisite to taking your trade, to setting up. Always set these up and work out, okay, if this comes back here, would this be a stop take? Would this where other traders or a lot of traders would place their stops? You can clearly see that once the market gets into here, you know that traders are going to be placing their stops down through here. They're trying to lock in their profits as they come down. And they're going to be targeted before we get any substantial move underway. Always look for the stops where they're going to be, and always look for the targeting. Hope that helps. Look forward to hearing from you soon. Take care and have a wonderful weekend. Okay, bye-bye.